Welcome to Momentum Monday. Today is November 12th, 2023. Howard, how are you handling the current markets?
Good. Mostly, as you know, indexing the last year. So
So you're doing well then?
I'm doing well enough. I'm not fully invested, but it's much easier to buy. I think we talked about it last week. The biggest transition to indexing versus stocks is in indexing, you buy dips. And my old strategy forever was buying strength. And I'm more comfortable at my age buying dips in the market. So, it's a better strategy for me when I'm not following the markets. But the good news is there's some strength now. We'll see if it can carry through. But what are you saying?
Yeah, I mean, absolutely. There is a lot of strength in large caps specifically, especially tech stocks. Anything over $10 billion valuation has done really well. And it's both software stocks. This is
Yeah, I mean, they looked the weakest 2-3 a month ago. Couldn't get anything going.
Yeah.
Just
software acting really well. I mean, some of the
what's leading that one? Is it, I guess, Microsoft? I guess it got to be Microsoft.
Yeah, Microsoft, but also you have companies like Now and MD and DDOG, like a bunch of software names that are acting constructively, setting up, breaking down.
They're gapping out. I mean, and, Microsoft is.
So you have software strong. You also have semiconductor super strong, near all-time highs.
Yeah.
TSM, they finally raised guidance on Friday, and they just reported on Friday that for the first time since February this year, they're seeing improvement in the sector. They're seeing sales growth. And as we know, they are the biggest white label manufacturer of chips in the world. So what they see, it's kind of an indication of what's really going on in the entire industry. And that breakout on Friday basically helped the entire semiconductor space. I mean, obviously the leaders like NVIDIA and AMD, but also many of the other ones like Avago and
like I was saying, NVIDIA looked a lot like Tesla did. If you were to put NVIDIA up against Tesla over the last month, you can see how the economy, like Tesla, is much more tied to the general economy than NVIDIA.
And of course it is. I mean,
no, but you can see the difference, right? Like you see how Tesla can't get traction, and NVIDIA and the leaders, the pure leaders, Microsoft, NVIDIA, Meta, even Amazon, even Netflix bounced, and Tesla, which is tied to an expensive product. So it's not everything, right?
Yeah,
you're starting to see
everything except Tesla and small caps.
Well, I think Exxon, the oil, have the oil.
You're right. Oil stocks pulled back, definitely. And it's been really hard to trade energy names. Basically, they've been much better buy on pullbacks than chasing any types of strength in general. They just don't trade as tech stocks or as consumer discretionary stocks. So you just need to have a different mindset when you deal with them. But it's a good thing that we saw a pullback with energy in oil prices because
for the rest of the market it is. I was gonna share, Ivan, if we pull up.
Okay, go ahead. Do you want to share?
No. I was just gonna share if we pull up like the S&P or let's pull up the QQQ again, right? Which I'm always over the SPY, which is, and I use XLK to be honest. In fact, with my direct index, I use XLK.
Okay. Do you want weekly or monthly? What do you want?
Let's look at the weekly, right where you got it. The super interesting thing that this week, and I'm never a macro person, I'm not a news person, but I think the biggest news, obviously, is the war. This weekend was some really fascinating news out of the Arabs held a summit, and part of it was just, Iran proxies were there. What's his name from Syria showed up. He's been in hiding forever. So you just had a bunch of thugs getting together, shaking hands. But what was interesting about is Iran was there, and they're not even an Arab nation, but they couldn't agree. I mean, UAE, Saudi Arabia, Morocco, Egypt, Jordan kind of said, "Back off. We're not going to do an oil embargo. We're going to let America ship military stuff to the U.S. and we're going to let Israeli flights, fly over Arab countries." So, I think a majority of the Arab nations want just meanwhile, American college kids are like free Palestine, and the majority of Arabs are like fuck Hamas, which is just a really interesting global shift that the media hasn't picked the nuance up on it. The media is very focused right now on the libs and obviously the anti-Semitism, which is raging, and the war, which it should be. And what they're not focused on is the hostages. What they're not focused on is Saudi and UAE, Jordan, Egypt, kind of sticking with this Abraham Accord stuff. And that could be very bullish, right? And having everybody kind of lay down their weapons and focus on like diversification and wealth and actually rising out of poverty is a good thing. So there is some, amidst all the micro nastiness and murder and death and civilian casualties and the anti-Semitism and the fact that the colleges and universities have been outed for what they are in the far left and the politics that's ahead, the market is saying, something else is happening right this moment. And obviously in a war, anything can change, but that's a pretty good setup. And then, price action is all that matters right now. And you have Microsoft kind of leading the market.
Yeah, closing at all-time highs.
The most important thing about this Microsoft breakout, Ivan, is that Microsoft is so interweaved with AI. And Microsoft's Achilles heel was, will the Fortune 5,000 or 500 companies eventually get off Microsoft Office? And I think Microsoft's integration with everything AI by investing, basically owning OpenAI in a way that they could, because the FTC would never let them buy the whole thing. And obviously with GitHub, etc., Microsoft's kind of ensured this their another 20 years because they needed AI to work within their Microsoft products. The other interesting thing, Ivan, is, and I think Google closed above 130 again, Ivan, if we look at the daily.
Yeah, 132, yeah. I mean, it's still below its 50, so it needs time to really set up again. It's
yeah, and you can see, but I'm saying it was a good opportunity for it to really sell off. And obviously below 120 would be problems, but even Google kind of holding in there. But two companies, Apple and Microsoft, now make up 14% of the S&P 500, which is a record. I think IBM back in the day was like 10%. IBM and a couple others.
The question is, how much of their profits are they accounting for?
I just know the market cap of the S&P to two companies now makes up 14%, which is why I like indexing, right? Like, it just forces you to own what's working. And, would I probably have 14% of my money in Apple and Google and Microsoft? I hadn't even owned Microsoft till I started indexing. So, indexing has kept me in probably the best, company without having to own it. Same with NVIDIA, same with Berkshire, and even same with Meta, because I sold my Meta stock but having it in my indexing has helped. So for, as a late convert to the whole idea of direct investing and indexing, those are the benefits. All right, so what else are you seeing breaking out?
So we mentioned semiconductors are strong, software is strong. Obviously, almost anything related to tech is strong. I was on my way to mention that pullback in oil prices actually helped some of the airlines, cruise line that took quite a hit in the past 3 months to kind of bounce, and we see if they will form new bases. and try to bounce harder. Interestingly, I mean, China has been a complete disaster for most of the year, and then, but we're seeing some select Chinese stocks acting much better than the rest. Like this one, NetEase, which is like a gaming company, has been really slowly breaking out of a kind of constructive setup. YY is another one, and then you have the PDD, which is like a cheap Amazon Chinese knockoff that is been acting constructively. MNSO is another cheap Chinese retailer with around the world locations. Definitely very interesting strength in apparel stocks, which you wouldn't expect that considering how hard like stocks like Target have been hit. But then if you look at stocks like Urban Outfitters or Guess, or especially A&F, Abercrombie and Fitch, they really are acting constructively.
Is that 3 billion or 33 billion?
3 billion. They're small.
Tiny.
3.3 billion.
Yeah, I think the biggest thing here is, Ivan, is that the small caps can't, relative to the Qs, just can't get
Very
going.
interesting. So last week small caps fell 3%, while the Qs were up 3%. So definitely very big divergence here.
That's what I'm wondering. Do the small caps catch up, or do the Nasdaq flame out?
I mean, if I have to guess, I'd say they're gonna try to catch up. I mean, we saw it in May when the QQQ, the large cap tech, they broke out in mid-May, right? And then small caps joined a couple weeks later, because exactly at the same time people were discussing the same thing. They were saying, oh, there's zero breadth. I mean, many stocks are not participating, but then they started to participate a little bit later. And I kind of think that if this rally really has more room to run, small caps will somehow catch up, at least partially. I mean, they don't have to outperform. But if speculation remains rampant, if the market, if like
small caps will catch up,
expectations improve, I can totally see, people moving from, relatively slow movers, like Microsoft and Apple, to something more, volatile, like, I don't know, Lemonade or Carvana, that can move 30-50% in a week.
Yeah, if you're going to speculate, I'd stick to, as I brought up, profitable ideas like Shopify or Udemy.
Yeah, Shopify definitely. I mean, they're acting constructively post earnings.
Yeah, or a Udemy, like
their time.
Showing something.
LTR is another leader.
Palantir I added this week because of, my thesis being defense spending will just explode. The Palantir CEO is out really hammering the fact that he would never sell stuff to the East, to Russia, China, Middle East. He's focused on Israel and US, which has kind of always been my aggravating concern. And you can see if the next decade is filled with defense spending and government spending on our own Iron Dome improvements and our own borders, building walls. Like I said, I think the trend's going to be building walls, digital and physical. We just have to. And the Middle East gave us an excuse to play some catch up, right? It's kind of now bipartisan that, like, you're insane if you don't think, the U.S. has to do a better job at the borders. Unfortunately, insane have proven to be insane here with the posturing and the rallies. But Palantir's interesting to me, and I added that as just a
cybersecurity, definitely. I mean, they report, I think, this week, so it's interesting to see how they.
I mean, the market cap has me.
But we have ZS acting constructively, setting up for a breakout.
We were talking about this for months. They were leading when the market was going down. So
definitely a hot space. Yeah,
CrowdStrike looks amazing. What's the weekly look like on that?
Cybersecurity, yeah. This is the weekly. It's not a small company, 47 billion, but this is exactly the sweet spot where.
And if you're going to pay, if you're going to start paying 50 billion, just own the index, right? If you're going to start owning $50 billion breakout companies, own the index. If you're going to try and speculate right now in small caps, like I said, Udemy, UDMY, or Shopify, try and pick companies that are just switching to profitability and are going to get rewarded because no one's following them. And but anyways, that's kind of how I've been thinking about it. Another stock that broke out in another industry, which is perennial winning stock, Copart CPRT, which I shared on the stream. It's it's not cheap, but it's just a very long-term, incredible performer. And that's a hell, a nice breakout. So when you see charts like that, you can't just say it's the big names that you've heard of. You have to go a little bit deeper and look at long-term industries that have performed well. And this is very much an economy based, almost a little bit counter-cyclical at some point, the auto parts business. But so there are signals that people may be on too bearish.
Just look at the reactions. I mean, the market all of a sudden started to
I
react.
had some Uber. I mean, the big problem with Uber is these RSUs. Like I've talked to a lot of Silicon Valley people, like just give away so many shares. It's so dilutive. And it is $100 billion company. I mean, so it has to be.
Definitely.
What's that?
It's a slow mover as a stock.
Well, what I'm saying is $100 billion company, so you can own the index and there's so many new companies coming into this large cap category, and how do you for Uber to become a $200 billion company on its own, these are monster leaps. I do own a little bit, but
I understand your reasoning, but then at the same time, if you look at the past 5 years or 10 years performance of something like Apple or Amazon or Microsoft, they absolutely crushed the S&P 500. Sure. So there's still large caps that can outperform.
Sure, that's what I said. I added some of that. I added some Palantir. I have some Shopify. I have some Udemy. Like I'm augmenting, my indexing with a few stocks. I feel. No, not Unity, Udemy.
Oh, Udemy. Okay.
So I'm saying I'm taking some shots on some ideas on top of my indexing because I feel like it's too bearish out there. I'm not comfortable, which is always a good sign, but slowly I'm adding it. Look at Axon, Taser. I mean, if there's not a better position business, that nobody knows about.
Near its, it's looking really beautiful near its all-time highs.
Another one that I own is MMYT. So, I own 7 or 8 stocks right now, and that closed at an all-time high.
MMYT, yes.
It didn't close at the all-time high, but
the Expedia of India, yeah.
I mean,
they're finally turning profitable after so many years.
That's what I said. If they have to be profitable this time. If it's just, you know what I'm saying? Like, it's not cheap, but it's profitable. And I think to get onto anybody's radar, the first question they're going to ask is it profitable? Which is probably why ARK, if you want to own unprofitable, just buy ARK. But that's why it lags, it's unprofitable. And, it's just not acceptable right now, right? 8%, 5% interest rates, shrinking world, harder to do sales. People aren't in the mood to just try any product. They've been doing that for 10 years. So I think if you're not profitable, it's just, you got to be really careful here. So that's my thinking. I really appreciate it, Ivan. I'm off to New York. You're doing good?
Yeah, I'm doing good. All right, Howard.
You're probably leaning long now, finally adding some position.
I am leaning long. I have some longer term swings, and I'm usually doing the usual short term swinging every week. So yeah, but mostly on the long side, yeah.
Yeah, I worry about this Russell thing, but I think we'll know more this week.
We'll see more distribution days before things get really bad. And so far, we only saw one distribution day last week, and then immediately it was followed by a super big accumulation day on Friday. So, so far, Boost seems in complete control. I heard that Moody's, or one of those rating agencies, they downgraded the US debt again on Friday after the market closed. So it'll see if,
as they should have done 2 years ago, but now they're doing
it. This off on Monday. it seems like as of right now, the market doesn't really care about the situation with bonds. Like the market does believe that maybe interest rates will remain where they are right now, but they're not really going to go much higher. That's why stocks are acting so constructively, but it depends on really the bond auctions. If they're not really...
Listen, we rallied very hard into the weekend, a weekend that was going to have an Arab summit, that was going to have Israel pressing on in the West Bank, in Gaza towards the hospital. There was a lot of reasons to sell into Friday, and people bought. So, barring a non-complete reversal this week, a lot of money and a lot of accumulation in the markets, and hard to bet against that. And then that reverse in the VIX, so the market is climbing this wall of worry right now, which is what it's supposed to do, shake people out.
Exactly, yeah.
All right. And like I said, as I say on my other show with the guys, I'm seeing really good founders with really good ideas implementing, that really understand what they're supposed to be doing. And then you have truly this defense that wasn't, we can talk about the Lockheeds and the Northrops and all the other one, but like the amount of spending that's going to happen on American defense, and in both copying Israel and working with Israel to see what works and what doesn't, is going to explode for the next 10 years. Like it or not, that's where the money's going. Virginia, DC are the new Silicon Valley. A lot of VCs have already been planting those seeds for 2 or 3 years, and those are going to start to pay off. You're seeing that in the public markets with Palantir possibly. And so anyways, and that's, you went from crypto to AI, and sure enough, it's defense that's going to possibly be the big kahuna for where the dollars can go. And VCs are quick, like they will set up funds just to fund this, some of the bigger VCs. But anyways, have a good week, everybody. Thanks, Og.
All right, thank you, Howard. Bye.